Hello friends, welcome back to part 8 of my Tesla earnings forecast video review series. I'm joined again by my host Loki, my co-host Loki, who will pipe up if he wants me to emphasize any points as we go through my charts that I tweeted out along with my most recent Tesla forecast. Let me share my screen with you. So in the previous video, in part 7, we looked at this chart. This chart looks similar to it at first, but it's showing different information. So let's read the title. Tesla average revenue and cost of sales per cash delivery, excluding leased vehicles and regulatory credits. So what happens if we throw out the leased revenue and the leased deliveries and the regulatory credits and look only at what's left? So the line chart here is showing you total deliveries minus leased deliveries. I'll give you an example of that. I'll mouse over Q4 2022 to show you that if you throw out the leased deliveries, it was 388,244. What am I forecasting for Q1? A little bit of growth, up to 401,687 after throwing out the leased deliveries. So total deliveries will be more than that by the amount of the leased deliveries. Just to give you an idea what's going on. So why do you do that? Because the leased business is they're not buying the whole car. they're only buying half the car. They're making payments on half the car for 3 years, and they're giving the car back to Tesla. And then at that point, Tesla has a 3-year-old leased, formerly leased vehicle that they can sell used for, maybe more than half of what its original MSRP was. And that's a pretty good business to be in. The trick is you're not getting all the money up front like you do when somebody gets a car loan and pays you for that car up front. Even if they're making payments over 5 or 6 years or whatever the agreement is they made with their bank or other financial institution, Tesla gets all the money up front from that loan provider. So you can't switch to an all leasing model because then Tesla would be out all the money to produce those vehicles in the first place. And that would put them in a pretty tough operating cash crunch. So what's happened since the beginning of 2018? Well, the ASP, excluding leasing and credits, was 93,400 at the start of 2018, and that came down rapidly as Model 3 scaled up and became a larger and larger portion of the mix. This is not Tesla cutting prices drastically. This is just more of what Tesla was selling becoming the Model 3 that had a starting price at $35,000. Now in 2018 you couldn't buy a $35,000 Model 3 because they were only making the configs that were long range, so you had to pay $45,000, and then if you wanted autopilot and full self-driving, it was another like $8,000. So if you wanted a Model 3 long range, you were paying closer to $60,000. And toward the end of 2018, they released the mid-range Model 3, which was always intended to be a short-lived product, and it was. That's when I got my mid-range Model 3 in Q4 of 2018, which is why I remember that. So you can see the cash ASP had already fallen to 53,000 then, which is where it is now. So in Q4 of 2022, the average selling price was $55,000. It hasn't been a lot higher than 55,900 in recent memory. You'd need to go back a few years to find a higher price than that. Q4 of 2019, 58,000, with I think a bunch of European deliveries happening at the end of 2019. because the U.S. EV tax credit fully went away at the end of this quarter. So that's what the ASPs were doing. How about the cost of sales per vehicle? Has that been dropping? Yes. Tesla has been working hard on the cost side of the equation. So this number got down in 2021 below $40,000 per vehicle before Tesla started ramping up Model Y production significantly. So now Model Y is more of what Tesla is selling. Also in 2022, Tesla ramped up new factories in Berlin and Austin that are not up to their design capacity, their design production output yet. So their costs are higher than typical. And what I'm forecasting for Q1 is a little more cost of sales per vehicle, 43,800, than we actually saw in Q4, 42,100. And then some improvement after that, 41.8, 41.4, 41.0. None of that is uncharted territory, and we ought to be getting cost improvement out of Austin and Berlin as they continue to ramp up. But we may not get that right away. So I'm forecasting what I think is conservatively for Q1 with a $43,800 cost of sales per vehicle, excluding leasing. Now, that's going to be less gross margin per vehicle pretty significantly, 53.6 minus 43.8. That's a little less than $10,000 worth of profit per cash delivery. We've been seeing higher numbers than that. So at the beginning of last year, that number was $15,000 per vehicle sold, 14,000 here, 14,000 here, 13,000 here in Q4 when some of the U.S. delivery incentives were happening, knocking down this ASP before the price decreases of Q1 happened. But I do expect the same ASP in Q2 as in Q1, 53.6, 53.6. Not that I'm planning every model from every site to be exactly the same. This is just the weighted average that gets kicked out at the bottom of my detailed model after multiplying and adding up all of the models produced at all of the sites. It's averaging the same ASP in Q2 as in Q1, and then growing some from there in Q3 and Q4. So that is what I'm expecting for ASP and cost of sales. You can see the cash deliveries only up a little in Q1, but they should rise significantly to be record highs. I mean, this is a record high too, but a lot of growth from Q1 to Q2 when Shanghai gets more weeks of production back into the schedule. This number is being artificially depressed by some additional closure time at Shanghai for factory retooling and for allowing employees there to celebrate the Chinese New Year. So that is what this chart is doing. And with that, I will outro and say if you've enjoyed today's video, click the like button. If you're not subscribed to my channel already, why not go ahead and subscribe to my channel and click the notification bell to get alerted whenever I post fresh content. Thank you to my executive producers, Kathy Kitchler and Halter Ferguson Financial, and I'll see you in the next one.